and then we will continue the program. So may I invite Simon to the podium, please.
Morning, everybody. Good. My name is Simon Howard. I'm the Chief Executive of the UK Sustainable Investment and Finance Association. We are a membership body for financial services firms who have a commitment to building a better planet and a fairer financial system. That's our vision, and the way we seek to deliver it is by supporting our members to grow their business. So overwhelmingly, our members are commercial firms. Profit is not a dirty word to us, but we recognise that finance has to operate in the right and appropriate way. I've listed a few of our members down there. At the bottom, I think some of you may have seen Webb speak yesterday at the Takaful Summit. Our members are many of the large household names, but also individual financial advisors who would advise you on your SIP or your pension or your savings. And the breakdown of members is shown there in the pie chart. We've got about 240 split between big financial institutions, consultants, IFAs, and asset owners. So we touch UK financial services at many points, and our members are stewarding, banking or managing at least £10 trillion worth of assets. I'm going to start talking about retail investment, about the citizen and what he and she wants. Oops, I've gone too far. These are estimates of the size of the retail sector in the UK, expressed in millions of pounds, so we're up to about 19 billion. There are two sources of estimates here. The blue line are estimates which Vigeo Eiris do each year for our Good Money Week campaign. The brown line is from the Investment Association. The Investment Association monitors sales of a group of funds they define as ethical. And you'll see the two lines are essentially moving in the same direction. They are effectively cross-checking each other. They will have a lot of funds in common. But they do show that there has been steady growth in this tight definition of ethical and retail. What's driving that? Why, as the previous speaker mentioned, are we beginning to see an upturn in interest in this area? For about a decade now, we've been doing opinion polling for our Good Money Week campaign. This data is from the last 2 years. And a key question we've asked is it's an opinion poll done by YouGov. It's as good as any other opinion poll. We ask the participants a question. We give them a spectrum of attitudes they can choose for how their own assets are invested or banked. On the one hand, it's all about the money. Then it's mainly about the money. Then it's equal between the money and making a difference. Then it's about mainly making a difference, and then it's solely about making a difference. And the key thing in the data for 2018 against 2017 is if you look at the answers to only about the money, and you see this column here on the left, in 2017, I think that was 38% of people said their investment stance was only about making a return, only about the money. That dropped very sharply in 2018. You'll see it's down there to, I think that's 22%. A really marked change. At first sight, half the people have changed their attitude. And to what have they changed? Well, if you look at the right-hand side, there are a lot of people who are being very honest and saying, we don't know. Can you see how that end brown column has risen in 2018? Gone from what? Can't read my numbers. About 13% to over 20%. People who are obviously, I think, conflicted by the question, what do we mean by making a difference? And the most popular answer last year, for the first time in our decade of answering the questions, is the brown line there. It's people who say, you know what, I'm equally concerned about making a return and making a difference, which you might think is kind of the neutral position, almost the default position. I'll consider both those aspects of my investment. But if you look at the blue line historically, it's always been about the money. There have been rises and falls, but that has always been the most popular answer. Our fellow citizens have always hitherto said it's about the money. Last year it changed, equally making a difference, equally making the money. And we think this is a significant change. So that's the citizen. What's going on? Oh, I'm sorry, another slide. This isn't our survey. I found this survey recently. It was a survey done last autumn by Boring Money, and they asked, in general, which, if any, of the following do you think are important to invest in? And there, it's things like health, education, food. So it's kind of important base-level concepts. This is what the public said last autumn in this separate survey. This is what they're interested in. And in past years, when we've asked similar questions, we've had similar answers. Topics like food, topics like education, or issues like tax. People very exercised, people concerned. They want corporates to pay the right tax. Last year, we did a focus on the fact that women in the opinion polling want to invest more ethically than men, but they save less than men. There's an issue between the men and the women and how they approach finance and how much they save. And coming out of that came a sub-campaign called Who Fund the World, which is a reference to Beyoncé title. I didn't know that, but my very young team briefed me on it. And what we discovered is there's an important demographic of women who want to know more about finance, full stop. But they don't like what they're told by financial service companies. There seems to be something in the language the companies use which is off-putting to women. So if any of you are in the financial advice profession, I think this is important. We have tapped into a demographic of women who want to know more and want to have it explained to them in a different way. We ran a public event. UKSIF doesn't do public events, it's about helping the members. But as an experiment, we did a public event in last Good Money Week, open to the public, women only, and you had to pay to come. And it sold out. This was interesting. It was in London. Things like this do sell out in London. So we've tried it again elsewhere. We've tried it in Bristol and Edinburgh. They've also sold out. The challenge now is to take it perhaps away from a university city into a smaller environment to see if the same demographic is there. But everything is pointing to the fact there is unmet demand for a certain kind of investment from women. The UK is very good at ethical or ESG or responsible investment. Use whichever term you want. These are data from successive surveys done by UKSIF, an association of European organisations like UKSIF. You can see there in terms of exclusions, the investment style where you simply ban tobacco or alcohol. We've got that's over 2,000 billion euros, 2 trillion euros. Managed in the UK, making those exclusions. That's the second highest total in the European area. If you look at engagement, this is the idea that you contact a company management, you tell them what you want, you use your vote and your lobbying power to get them to do it. We have the highest weighting of assets following that style in Europe. And I think particularly important, that right-hand column, integration. ESG integration is the idea that the fund manager will consider all these factors about the environmental impact, social impact, tax, how you treat stakeholders, how you treat indigenous populations overseas. The fund manager recognises that all of these factors can impact on the share price and they are integrated into how the fund is managed. And we have the highest total there of any European country. So the UK is very good at this kind of fund management. Moving on briefly, my colleagues on the panel need to speak. The government is changing some rules about UK pensions. So if you're involved in UK pensions, the big pension schemes are now going to have to state what their policy is in respect of ESG, including climate change. And UKSIF is going to be working with the Green Finance Institute, set up 2 weeks ago, on pension funds and climate. There is stuff coming out of the EU, in particular there, the second bullet point, financial advisors will have to canvass the opinions of prospective clients Does the client have particular values he or she wants reflecting in the advice the advisor will give? There's going to have to be a written questionnaire, and then the advice firm will have to say how they have addressed the concerns the client raised. This is currently in EU wording, but I have no doubt the UK government will follow it. The UK government has adopted the policy of at least matching what comes out of the EU in key areas. So forget Brexit, it's not going to change it. Financial advisors are going to have to spend more time on this issue. We think it will happen next year, 2020. And then there is some very technical stuff, which maybe I'll talk to anybody who's got questions afterwards or in the Q&A. Essentially, it looks like we're probably going to get a label for ESG or responsible funds. Someone is going to start labelling the funds. It might be the Investment Association, it might be the British Standards Institute, I don't know, but it looks like that's going to come. And finally, this is coming from the top, the UK government. You will have heard about the net zero target, reduce net carbon emissions to zero by 2050. This will impact how companies operate. I've touched there briefly on meat, the production of meat. To get to net zero, the Climate Change Committee says we're going to have to dramatically reduce the amount of meat we eat. This has implications, for instance, for the big food retailers. If you just think about the layout of a Sainsbury's or a Tesco store, maybe 5 to 10% of that floor plan is devoted to selling meat. If we're going to be eating less meat, they're going to get less sales. If you think of how land is used in this country, we're going to have to grow more food rather than pasturing animals for eating. This has serious regional implications. The Welsh hill farmers raise lambs each year. If we're going to eat less lamb, what are these hill farmers going to do? Serious questions there. And something which is not widely known, in Europe, something like 2/3 of the antibiotics used are fed to animals to keep them healthy. Whether they're ill or not, there's a tremendous sum of money going to pharmaceutical firms, and that must now be at risk. So net zero target over the next decade is going to change how companies need to operate. Fund managers, financial advisors will have to respond. Finally, the green finance strategy, it's political commitments, but the government is currently saying the right thing. So I started off at the beginning, all change, question mark. Yes, I think we are going to see a lot of change. The UK is very good at responsible investment. UKSIF members in particular are excellent at it, and I think we're going to see continued growth. Thanks very much.
Thank you very much, Simon, for that very thought-provoking overview. And just before you came, I was also saying the same thing, that it has to be all change. It's on everybody's mind. But as we will see in the Q&A, that also can lead to box ticking and not doing something. But let's see when we come to that. I would now like to invite Professor Paul Palmer to talk about the evolving impact investment universe.
Marvellous, thank you, Iqbal. Right, I gather slides work that way. Yeah. Brilliant. Well, good morning, everybody. And so I'm going to do a slightly different, probably, presentation to Simon, based upon a lens from the voluntary sector, the charity sector, to begin with, and then wider across. So not on the retail investment market per se, but it's actually interesting that charities, right, are absolutely appalling in the UK. I'm not sure how many charities you have as members, but the last time we looked, less than 5% of the 100 billion of charity investment was actually in ethical funds. It's an absolute, well, how can I best put it, a contradiction. You would think charitable organisations would be embracing this. And yet, as I'm going to talk about later, that mantra of education, education, education is all important, mainly because charity trustees still believe they're locked in a world of maximising return rather than actually thinking about social impact. So it was a really interesting presentation, I thought that. Thank you. Right, moving quickly on then. So to put this into context, when we think of charities in the voluntary sector, we tend to think of people giving money as individuals. If we think of zakat, for example, I think my good friend Mez over there, I think I must have marked at least 5 PhDs on zakat over the last few years. But if we think about it in those terms, right, it's about this individual giving money.